Hello guys, welcome back to the Forex signal tutorial. In this tutorial, I'm going to be using basic example, basic explanation to give you a clue on whatever you are doing, especially those who have little or no understanding. Today we're going to be talking about risk versus reward, lot size, and pips, which is percentage point. But I'm not going to be using all these Forex terms so that you can be able to get a clue. Now, when you hear the word risk versus reward, this is self-explanatory. It means the amount you are willing to risk and you are hoping to get a certain amount. The financial market is a game of probability. We don't know what's going to happen in the next 1 hour. We don't know what's going to happen in the next 4 hours. But since we have a trading strategy, we have a edge above those who have little or no understanding. We have an advantage in trading the market. Now, when you hear the word lot size, it means the amount you are willing to buy or sell a particular currency pair. Let's say, for example, now, lot size. You have a $100 account, or $1,000 account. If you have more capital, the more you have more capital, the better. You have a $100 account, and you want to place a trade with at least with $10, which is 10%, and make use of at most 10% per trade. 10% of which is $10. Now you're not going to be using this $10 in the financial market. It's being measured by lot size, which is if we have one standard lot. I'm not going to be using all those terms here, but if you're using a $100 account, you are not going to be using 0.3. You're not going to be using more than 0.3, 0.003 at most. All these risk lot size explanation, there's a written word in that and the signal notification. You have access to that. Want to use $10 to trade, and since you're using a $100 account, you're not going to be using more than 0.03. This is a lot size you're going to be using to trade the $100 account. You're not going to be using more than this. Depending on your SL, that's the basic meaning of lot size, the amount we are willing to use to buy or sell a particular currency pair. Now, as for the pips, when you hear the word pips, percentage in point, now any little market movement, this is where we aim as a retail trader. Remember, we are not a hedge fund holder. We don't have a limited amount of money to trade the financial market. The reason why we are using a broker because we don't have large amount of money to trade the financial market. We're leveraging on brokers so that we can be able to trade the financial market and earn from the little market movement, which is pips. Let's just say, for example, let me give you an example here. I say buy a particular currency pair at 16. Let me say very good. 16.59. Don't mind my handwriting. 16.59. Then the market goes upward to 16.60 or comes downward to 16.58. This little market movement, this is where we aim as a retail trader. Okay, either is going up, which is buying, or is coming down if we are selling. So if it's coming to our direction in selling, we're making more money. If it's going to our direction in buying, we're making more money. All this little market movement, this is where we aim, which is the pips as a trader, a retail trader. So every little market movement, which is pips, that is when we earn as a retail trader. So guys, in the next video, I'm going to be explaining capital base and risk appetite. Okay, I believe you got what is risk versus reward. Lot size, which is the amount you are willing to buy or sell a particular currency. Risk versus reward, the amount you are willing to risk and you are hoping to get a particular expectation. Your risk reward can be 1:1, 1:2, depending on whatever setup, whatever signal provider you are using. But as for ours, you are going to be leveraging on our signal to trade the financial market. See you guys in another video. Cheers.